shares of Spotify, they're tanking today, following second quarter results that disappointed investors as gross margins missed analyst expectations. The music streaming giant also hiked the cost of its premium subscription. Let's take a look at shares right now. They're down by about 14%. That's where they end the day. So not quite its worst trading day on session, but it ain't great here. Ultimately, we were looking through some of these results. We've got Allie Canal here with us on set to help us really round out this conversation. Wasn't quite a miss on the MAUs. They beat in that category, though.
Oh, yeah. Subscribers is doing very well. Paying users doing very well. It seems like investors are concerned that the price hikes, which went up by $1 for the premium plan, that's going to negatively impact subscribers moving forward, which has really been the lifeline for this company. Another metric that investors have closely kept their eye on is gross margins. That disappointed in the quarter. It's been declining. We did see an upbeat surprise in the last earnings report, which did fuel some gains then. So I think the fact that we're reversing that right now is a concern for investors. But a lot of this has to do with a few different headwinds, one being foreign exchange, another being the fact that royalties, the cost of royalties are higher. And also Spotify is streamlining its podcast business. So there are greater losses around cuts to that unit. I think there's going to be continued cuts to come based on some of the results that we did get here. We saw revenue miss estimates. We saw losses widen. We also saw free cash flow, although it was positive, it was down sequentially and year over year. So profitability just continues to be a struggle for this company. And investors don't really seem to have the patience anymore, but analysts are really preaching the long-term game for Spotify.
Yeah, although interesting when you look at podcast advertising revenue, right? We've been talking about how much money they spent on that. They reaccelerated to more than 30% year on year. So things, at least on that front,
yeah.
I guess it's about the cost and the investment versus the revenue that's coming.
Exactly. And they say they are going to take a very strategic approach to their podcast investments. So that means really leaning in on the podcasts that are doing well and getting rid of those that maybe aren't. We saw them part ways with Prince Harry and Meghan Markle. That was a very
costly
endeavor. So that's something that they're going to continue to do throughout 2023. But clearly right now, with the stock down so much, investors weren't too happy. But look at that year-to-date performance. I mean, it's up more than 75%. So this is a stock that has really battled back some serious lows.
Let's talk about another stock we've been watching closely today. Shares of 3M closing the day higher following the company's latest earnings report. The industrial conglomerate posted $7.99 billion in revenue, beating analyst estimates of $7.87 billion. The company also raised its full-year earnings guidance and reaffirmed its revenue guidance. Guys, this is a company that is still very much in transition. They've really leaned in on the high-growth businesses like climate tech, like semiconductors. There's still a big overhang, though, and it is the legal settlements for this company. There is the settlement, the $10 billion settlement from last month on the forever chemicals that we like to call contaminating drinking water. There's a slew of liabilities that they're still having to clear. That continues to be an overhang, but when you take that out of the picture, things looking to the upside for the company.
Yeah, and like we've been talking about with a lot of these companies and their earnings, if you're able to boost that outlook and boost that guidance, that is a positive and you're going to be rewarded by investors. I also think a company like 3M, which is very diversified, it helps. So you can lean on different sectors of the business. For example, automotives was very strong in the quarter. Healthcare was also up slightly. That helped offset some of those lower growth units like safety and industrials, for example. Those sales fell 5.4% in the quarter. But you're right, despite that large second quarter loss, the fact that we did get that adjusted profit beat by a pretty significant margin on top of that outlook raise, I think that's a positive for 3M moving forward.
Absolutely here. We're also tracking shares of Disney this afternoon. Shares of the House of Mouse closing the day in negative territory, down by about 1%, following a downgrade to underperform from neutral by Atlantic equities analyst Hamilton Faber, who also lowered his price target on the media giant from $76 from $113. Faber citing concerns around Disney's linear advertising, saying it's clear that advertising is set to fall far faster than they have seen previously there. And you're seeing that reflected in the shares of Disney here on the day as well, Allie.
Yeah, Disney is just a company that's dealing with a few problems, right? I mean, we have this slowdown in their franchise business, the box office, for example. We've seen some of those Marvel movies struggle, and that's going to have a ripple effect to Disney Plus. Coupled with that, we've had an animation slowdown of sorts, and then in the background is this double Hollywood strike, and we're already starting to see the impact there with the company reportedly pushing some of those film schedules to adjust for the strike. So that's something that we're going to continue to watch. Outside of films, there's the uncertainty surrounding the macro environment. You mentioned the decline in linear networks. I mean, Bob Iger, he's clearly not married to them. He already hinted that he would be open to selling some of those TV assets. But who would be the buyer there? So there's a lot of uncertainty. Sports is continuing to do well, but then there's the question of when Disney will take ESPN fully over the top. There were reports that they're already holding strategic partnership conversations with major leagues like the NFL. We'll see if that comes to fruition, but there are a lot of unanswered questions when it comes to Disney, and a lot's going to be riding on this earnings report.
A company that really clearly wants to accelerate into digital, but still has the weight coming from linear. A lot of transition still happening on that front.